Welcome to the show, guys. I'm really glad to have you guys here. Now, today is, just let me see, Thursday, January 10th, 2019. Uh, Welcome to the show. So we're going to get started. We're going to talk about a number of subjects here. One of the things we're going to talk about is China. Let's get the charts open. Just a sec. My chart wasn't started. I have to wait a couple seconds while it warms up here and gets started. Okay, there we go. Okay, now we're in a zero hedge here, and this is a sign that the Chinese economy is actually slowing down, big time. I mean, it's more than a slowdown. It's huge. I showed you guys a few days ago the infrared from space. You know how the Chinese factories are all closing. Basically, they're just sending. I guess they're sending their workers home because there's this trade thing going on, and importing goods from China, tariffs on them, and the people aren't buying. We're saturated with debt over here in the West. I mean, we had all those good years when we had quantitative easing, and everybody was out there buying up everything, you know, and there were Chinese goods galore coming into stores and everything, and they were filling the aisles with merchandise from China. Dollar stores were having to buy the stuff as quick as they could, and the Chinese over there, their factories were just humming along, and the dollar store was constantly putting in more orders. We need more of those, this, more of that, you know, and the Chinese were working as fast as they can. Now the dollar stores is half empty, you know, and they're not sending orders over to China near as fast, and the Chinese have got all these factories built, and they're just idle. So the Chinese economy's rolling over. Next is going to be the Chinese real estate market's going to start rolling over. So the Chinese are getting desperate right now. They're going to go in, and they've already got their balance book. They've already borrowed tons of money, and they got to the point where they're saturated with debt in China, but they're going to borrow more. They're going to stimulus their economy again. How long can this last? They're running on stimulus. Their whole economy in China right now is running on stimulus. The factories are closing down. We're going into a worldwide depression. All the Chinese real estate's going to start to collapse now at this point. And so this is a signal right here. Chinese car sales collapse. And if you look at this chart, you can see that they're just starting to fall. I mean, they're starting to fall off a cliff. And this is a sign that the Chinese economy's turning over. The second largest economy on earth, next to the United States economy. The United States economy, I mean, I think it's going to start rolling over pretty darn soon, too. But let's get into this right now, and let's start taking a look at let's take a look at the silver price. What time is it here? 10:20. We got 10 more minutes for the Dow Jones to open up. I'll tell you, I think that this rally, you know, they've heard that they didn't get a deal, I guess, in China. Trump and Xi Jinping, I guess they didn't get a deal, and so no deal. The stock market rally is probably. I was expecting them to have a deal, really, and I was expecting them to rally the stock market. So we might see some rollover in the stock market today. It's very a possibility. Now, what we're looking at is on the silver chart. Let's hone in on it here and take a quick gander at it. Just a sec. I'm getting the chart narrowed down so you can see it a little bit better. The price is $15.63. We're down 10 cents on the day. And the green line is today. And what you can see is this looks like it's going up and down really big time in the last couple days with silver, but it's really not, because what this chart is they've narrowed the range down in. And we're only looking at a price between $15.50 and $15.75, you know, in this chart. That's because there's been very little movement in the price in silver right now. It's maintaining this little bit of gains that it had. Remember, it was back down in the $14 range. It's up in the $15 range now, and it's kind of maintaining this price. It's dipsy-doodling up and down with this price between like $15.50 and $15.75, but it's kind of maintaining this price pretty good the last little while. And so we see silver's actually holding its own. Let's take a look at gold. Gold price today is $12.90, and we see it's down $3, but it does. I don't think it's in this range too, between 1288 and say 1300. It's staying in that range pretty much too. Let's take a look at Bitcoin. Now, what Bitcoin's doing today? This is the 12-hour chart, by the way. And on this 12-hour chart, it's 37.73. We saw a drop. Now, I'm going to get hone right in there and show you this drop. Let's try the 15-minute. Yeah, here we can see the drop. We were running around 4,000 bucks last night, but all of a sudden we had this drop. I guess it was around 2:30 in the morning or something, if the chart's correct. Anyway, we've seen this drop down, and it dropped down to 37.53, and right now it's at 37.71, and we've seen some selling of Bitcoin, but this is normal, because if we go back to the 12-hour and we look at this, we see that it formed a wave pattern, and it come right down. It squeezed itself down to a very concentric, small little pattern around 6,300 bucks, and then we took this massive drop, and now it's doing the same thing. It's forming a wave pattern, and it's finding its price in somewhere. If I take the bottoms and the tops of the wave and equal them out, it looks like it's finding its price in around 3,600 bucks. You know, and of course it'll dip down below that. It'll dip down probably as low as, say, close to the $3,000 mark, and then it'll dip up to the highs of probably 4,200, 4,300. But on the mean average, it's probably going to be about 3,500, 3,600, 3,700, along in there. And it's going to continue this wave pattern for a while. The big question mark is when this wave pattern does exactly like the last wave pattern, where it squeezed itself down tinier and tinier until the waves got smaller and smaller until it found a price. Last time it was around 6,300, right? This time it looks like it's going to find a price somewhere around 3,600 or something like that. Once it squeezes straight down to that tight little pattern, that's when it's getting ready to do something. Now, last time it was at 6,300. It did something. It fell. Now, what's it going to do this time when it squeezes itself down into this tiny little wave? Is it going to go up, or is it going to fall again? That's the question. That's the big $64,000 question, you know, on this. But now we've kind of figured that out. Now we got to figure out, you know, when it does something next time, what's the higher probability for, like, your money? If you invest in it, do you have a bigger chance of it going down or up? You know? Well, you know, what's the upside to Bitcoin? Well, the upside's unlimited. It can go up. It went up to $20,000 last time. It doesn't have to stop at $20,000. It could go to $40,000. It could go to $50,000, $60,000. Okay? So let's say the upper limit of Bitcoin, there is no upper limit. It could go up to $100,000. Okay? But downside, how much downside does it have? Well, there is a limit to the downside. There's $3,700 there. That's the limit. So it has a limit of $3,700 to the downside and unlimited possibilities to the upside. So the upside potential, just simple math, the upside potential beats the downside risk, because we know it's qualitative, the downside risk. We can qualify that. We know how much downside risk there is. Right now, at this second, there's $3,773 of downside risk. But what's your upside potential? Unlimited. So you don't know what your upside potential is. So you can't say, well, the upside potential would be $3,700. That would basically double the price of Bitcoin. You know? Is it going to stop? No, it doesn't have to stop. It could go up a lot higher. So your upside potential is higher than your downside risk in this. You know, you have to take that into consideration. It's just something you got to think about, you know, when you buy the stuff. Now let's take a look at cryptocurrency market capitalizations. $127 billion. Bitcoin dominance at 52.4%. And we see this market drop that's scaring everybody right now. Not scaring me. It's not scaring me. I really think, I'll tell you what I think the downside is to Bitcoin. I think Bitcoin could go down to 27, 28, 2,900, along in there someplace. I think that it's gonna meet a lot of resistance there, and it's gonna be tending to go back up if it goes down that low. If it goes down that low, I'm wishing it'll go down that low, you know, because I'd like to pick up just a little bit more, you know. Uh, let's take a look here at I'm gonna do the later stuff because I don't think the Dow's quite open yet. We got 2 more minutes. Now let's take a look at oil today. 52.03, and we see oil's trying to drop off just a little bit. It's down 0.5%. It's down 0.63% on the day. The oil price, I think that the oil price is going to drop back down again a little bit. Uh, that's my opinion on it only. But I think the oil price is going to drop back down a little bit. Let's take a look at bonds and rates today. Bonds, we see falling yields across the board today. There's still these capital flows must be coming in there. You know what? The Fed, you know, they have these computers they can use computers like at places like the Pentagon or whatever. And these computers, they can model the economy. I don't have access to these computers and stuff. They probably knew about these capital flows. I find out about it after, you know, but they probably knew before because they're probably able to run computer models. But they're not going to let you see those models. They're not going to let anybody else see those models. They're for their eyes only, you know. And so they probably knew that these capital flows were going to come into the treasury market, you know. And the reason why they probably knew that is because they knew that they were creating the best deal on treasuries. These treasuries are the best deal, and so the money's coming in. People are getting scared, and people are coming into the U.S. dollar and coming into these treasuries. But you notice when they get scared, they start to come into gold and silver too. Not in a big way yet, but that's coming. They got to be more scared. The market's got to make them more scared to make gold and silver start to take off. They weren't scared enough this time. A real crash in the markets will really get them frightened. Let's take a look now at the U.S. dollar index. 95.32. It's trending upwards a little bit today. Let's go on the charts and take a look at the last month to see more what it's doing. You can see it's declining when you take a look at it over a month. Little ups and little downs, but overall the dollar's losing strength over the last month. Now let's take a look at the Dow Jones Industrials. We're down 95 points on the day so far. I don't think today's going to end up being a good day for the Dow. We're in the red already, and we're probably going to go a bit deeper into the red today. That trade deal didn't pan out. That's one of the big things. Now, I got another number of stories I'm following, keeping a close eye on the yellow vest thing that's going on. I'm keeping a close eye on the Brexit. I'm going to tell you what, it's looking more and more like we're going to have a hard Brexit. Seriously, folks. They're trying everything, but they don't have, it's difficult for them to get out of it. They're heading straight for it. Theresa May, her deal is probably not going to get through Parliament. And we're heading right for a hard Brexit. The impact that could have on the financial system, you know, it could have quite a profound impact on the financial system. Because the financial system is ready to turn over. It's ready to roll over at this point. Listen, thank you guys for listening. Like and subscribe. And you know what? We'll catch you on the next show, guys.